Our ticket size is between $500,000 to $2 million. My name is Keziah Njeri, a principal at VestedWorld. We are an Africa-focused venture capital firm investing in Kenya, Nigeria, and Ghana, and we selectively invest in Tanzania, Uganda, Rwanda, and Ethiopia. We are seeing an increase in investments in tech-enabled services as well as essential goods and services. And this is being driven by a rising population, a youthful population, rapid urbanization, as well as increased mobile and internet penetration in Africa. And on the tech side, we are seeing more opportunities in AI-enabled solutions that are being used to solve for problems in Africa. We've seen applications in credit scoring. We've also seen applications in precise agriculture, and we're also seeing more applications in the healthcare space. And we expect this to continue growing as more and more sectors are getting digitized. And as these tech-enabled businesses continue to grow, there is going to be need for digital infrastructure, which includes data centers, cloud platforms, all of which will enable these companies to scale. We also expect to see an increase in investment in essential goods and services to address the growing demand for food, personal care products, household goods, as well as non-durable products. Investment readiness is more than having a pitch deck and a data room. It means being operationally ready, financially ready, and strategically ready to accept or rather to take on external capital and to sweat it out in order to generate returns for yourself as a founder and for your investors. For us, investment readiness means having a clear product market fit, and this can be demonstrated by high retention rates, growing revenues, a growing customer base, and this shows that the customers are interested in the product that you're building and are willing and able to pay for the products. We also consider the strength of the team. We like to see teams that have complementary skills. That includes business and technical skills. And we also value coachability, resilience, and ability to navigate the challenging operating environments. Given that you're an early stage investor, we like to see businesses that have proper business records. They have their financial records, audited financial statements or management financial statements in the event they're still young and probably have not gone through an audit cycle. We also want to see proper incorporation documents and other agreements such as shareholder agreements and tax compliance documents. On the scale side, once a company has attained product market fit, we expect them to have a clear growth strategy, and this should include growth, whether it's from new markets, new products, or upselling to their existing customer base. And we expect them to also have proper systems and processes that will enable them to replicate to new markets and to new teams once they start scaling their operations. From our experience, founders who successfully scale across different markets have the ability to leverage on partnerships, and these partnerships could help to reduce the cost of customer acquisition, and in some instances it also helps to build early customer trust. We've also seen founders who take the time to understand the local nuances scale faster and more sustainably because they take the time to understand the different markets and in some instances understand the regulatory environment, the macroeconomic factors, as well as the customer behavior. And in some instances, they've had to localize or adapt to those markets, and that enables them to develop products that meet the needs of the specific markets that they are operating in.